Up 1,120% in the past 5 years, there is no doubt Bitcoin has been an incredible investment. Today, we're going to tell you the best way to invest. Welcome to Get Started Investing, a show where we help you make the most of your money. My name's Bryce, and as always, I'm joined by my equity buddy and crypto buddy, Ren. How are you going?
I'm good, Bryce. Very excited for this episode. Very excited to talk all things crypto and Bitcoin. This is one of the more common questions we get here on Get Started Investing at the moment, which is how do I invest in crypto? And so today we're going to compare some of the crypto ETFs and specifically the Bitcoin ETFs listed here in Australia and tell you which one we think is best, and then compare that to buying Bitcoin directly on a Bitcoin or on a crypto exchange. And in doing that, we're going to answer how we think the best way a beginner can invest in crypto.
Yes. Now, before we do, I want to quickly ask you one question that comes from our new long-term partner, BetaShares Direct. Ren, do you know how much brokerage you're paying every year?
Too much.
Too much. Nice. Well, as we've spoken about plenty of times on the show before, we all know that minimizing costs helps to maximize your investment returns. And that's why we are so happy to have our new long-term partner of the show, BetaShares Direct, where you can invest brokerage free in all ETFs, not just BetaShares ETFs, that's all ETFs, as well as over 300 shares traded on the ASX. And the best part is that zero brokerage is BetaShares Direct long-term commitment to investors, Ren. How good's that?
That is good. Love to hear that. If you want to find out more, go to betashares.com.au/direct to sign up.
BetaShares Capital Limited is the issuer of BetaShares Direct. You should read the PDS and TMD available at betashares.com.au and consider whether the product is right for you. Investing involves risk. Refer to the PDS for info on other fees and costs.
All right, Bryce, crypto. It's in the news, it's in the headlines, it's front of mind for a lot of people. And the question we are getting over and over again is it time to buy? Because it's dipped a little bit.
It has dipped a little bit from its all-time high on the 17th of December 2024. It's down 22%. General expectations is there's a little bit of upside to come, but it is down.
Very general expectations. So that's Bitcoin down 22%, but all crypto markets have fallen really since that. There was that Trump bump in November and early December, and then they've tailed off since then, and now they've been caught up in this more general tech sell-off.
Yeah.
But if you zoom out, the story is pretty exciting. You opened this episode with up 1,120% in the past 5 years, which means $1,000 invested would now be more than $10,000.
Yeah.
So you'd be pretty happy if you'd invested for the past 5 years. The question becomes, is it time to buy the dip? Or if you're a newer investor, is it time to introduce crypto into your portfolio? But the more important question, given that you're already listening or watching this episode, is how should we do it?
That's right, Ren. And we have a question here from Jordan.
Hi guys, love the show. Just had a quick question about investing in crypto via ETFs rather than self-managed. What are some of the advantages and disadvantages and some potential options out there? Thanks.
Thank you for the question, Jordan. We love hearing from you guys. A reminder, there'll be a link in the show notes or the description below where you can ask any question you would like, and we'll try and answer it on the show. So where we want to start is, I guess, on the ASX listed side of things, because that's been, I guess, the newest innovation in the crypto space is ETFs coming to market that now give us access directly to cryptocurrency without having to go through a crypto exchange. And there are a number of Bitcoin ETFs that are listed on the ASX.
So we can probably bucket them into different groups. The first group would be actual cryptocurrency ETFs. So there's a number that actually track the price of Bitcoin and the price of Ethereum. And then a separate bucket would be like crypto-related ETFs, where they're investing in companies that are working on crypto projects. And the one that comes to mind here is the BetaShares Crypto Innovators ETF.
Yes.
I think for the purposes of keeping this conversation contained, today we're going to focus on the Bitcoin ETFs listed in Australia.
Yeah.
Oh, because that's a third bucket that we didn't say, which is that there are a lot of like US listed crypto ETFs as well that people can access from Australia. But for the purposes of this conversation, let's focus on ASX listed Bitcoin ETFs.
Yes.
And we've got 3 of them.
We do. So we've got the beta shares option, which the ticker is QBTC. We've got a global X option, EBTC, and then a VanEck option, VBTC. So we're going to first start by going which is the best Bitcoin ETF and then how they compare to actually buying Bitcoin directly on the exchange.
So, what is the best Bitcoin ETF? We need to set a criteria to determine this. It can't just be what Bryce decides in the moment. And so when we
do that,
when we think about an ETF like this, they're similar to a commodity ETF. So, if you've listened to our content before on a gold ETF, it's quite the same. So, the questions you have to ask: does it physically own the commodity? In this case, Bitcoin, but it could be gold, it could be silver, it could be whatever. Or is it just tracking the price using like financial instruments like options? And our preference is always that it physically owns the commodity.
Yeah.
So that's criteria number 1. Criteria number 2 is who is the custodian and do we trust them? Like, are they a strong, stable financial institution that will be a good manager of that physical commodity, whatever it is? And then the third question is, what is the cost? What is the management fee for us to access this investment opportunity? So using those 3 criteria, nothing else you can think of?
Does it have a good ticker?
Well, given all of these are just letter BTC, I'm going to say that's a wash on all 3.
No, I think all of those 3 are the most important 3. So let's get stuck into it. We'll start with beta shares.
Yep.
So the ticker, as a reminder, QBTC. So is it synthetic or is it physically backed? This ETF owns underlying Bitcoin.
Nice.
So it is physically backed by the underlying asset.
Who's the custodian?
The custodian is a company called Bitwise. Now, I guess your second part to that, Ren, is are they trustworthy and are they a solid institution? They are the largest crypto index fund manager in the US.
Okay.
So you can't get much bigger.
No, you can't. Yes. And then finally, what does it cost for us to access this ETF?
It's 45 basis points or 0.45%, which is relatively in line with a lot of these types of ETFs.
We'll get to that.
Yes.
We'll get to that. All right. Second ETF, Global X EBTC. Is it physically backed or synthetic?
Synthetic. It is also physically backed. They own the underlying Bitcoin. The custodian, again, is a huge global player. They have cold storage. Well, it's stored in cold storage by Coinbase, which is the largest crypto custodian in the world.
Love that cold storage.
Yes, not in a fridge.
Oh my God. So it's not actually about the temperature of the room. It's about removing the cryptocurrency from the platform on which it's held, holding it in a separate crypto wallet. They basically look like a USB, not connected to the internet, unhackable.
It's hardware.
Yeah. And if you listen to Hamish and Andy, that's how Jack Post held their cryptocurrency, and then he lost their password and so couldn't access it.
Yes.
That's how unhackable it is.
Yes. And then in the management fee, 59 basis points or 0.59%.
Okay, so a bit more expensive than the beta shares one.
Yeah.
All right, third and final ETF, the VanEck Bitcoin ETF, VBTC. Is it synthetic or physically backed?
So this one is synthetic. So what that means is that you're getting exposure to the price of Bitcoin, but it is not. It doesn't hold any physical Bitcoin.
Okay.
Or I should say digital Bitcoin underlying it.
That's confusing. Yeah. Okay. So that means the question around custodian doesn't apply here.
No custodian.
And then the final question is, what does it cost?
45 basis points or 0.45%.
Okay. So if we go back to our criteria and we say we want a commodity ETF to have the physically backed commodity rather than synthetic, then we eliminate VanEck. Who is the custodian? We're choosing between Coinbase or Bitwise.
Both, I think, I don't have a problem with.
And then finally, the question comes down to cost.
Yes, that's really where these two separate themselves.
And beta shares is 14 basis points cheaper than Global X.
Absolutely. So, look, we recognize beta shares are our long-term partner here, but going off the criteria that we set, beta shares slightly comes out ahead of Global X just on its cost because, again, we've spoken time and time again on the show, you want to reduce your costs as much as possible.
Yeah. All right. Well, let's answer the second part of Jordan's question, which is comparing the crypto ETFs to buying crypto directly on a platform?
So we've broken it down. There are a number of things to consider. Let's start with the pros on the ETF side of things.
Yeah, so they're more regulated, I think is really the key attraction for a lot of people in the finance industry. ETFs are over crypto itself. It's simpler. You don't need to manage cold storage. You don't need to manage private keys or digital wallets. And they can be purchased through existing brokerages through a traditional investment structure.
So those are the pros. On the con side of things, I think the biggest difference is the fees. You're going to pay a management fee to the ETF provider, which we've spoken about for the 3 ETFs. So you're not going to have that in an exchange, and you don't directly own the underlying Bitcoin. Whilst you might have a claim to it, but you don't actually directly own it.
Yeah, I mean, no one worries about that with any other ETF,
No.
so I'm not particularly worried about that. All right, on the directly purchasing it from a platform side, the pros are lower ongoing fees, so no annual management fee. You will pay a transaction fee in most cases, though. And we're actually going to close out this episode by modeling a scenario so we can look at the comparison of fees. The other pro, if you're into the crypto space, is you get a lot more flexibility when you're buying the crypto directly. You can transfer it to cold storage, to another exchange. You can do things with the crypto, and you can also trade it 24/7. So you've got more flexibility there.
Yeah. Some of the cons on the direct side, we've mentioned cold storage a lot, but some people do have concerns around the security of it. So you do have to have more responsibility around the security. And to Ren's point earlier, there is a bit, from a regulatory standpoint, globally, regulation standards do change. So you just need to be aware of that. And the tax can be complicated, which when you're trying to transfer between coins and keeping track of all of that, it can get a little bit complicated.
Yeah. But in this scenario, we're saying if someone's just buying and holding Bitcoin,
of course,
the tax gets really complicated if you're buying, Ethereum using Bitcoin, and you've got to account for that.
Yeah.
So look, for me, there's no bad option here. If you want to buy it through the ETF or you want to buy it through the exchange, they're both pretty simple these days, and it's much of a muchness really. Your returns are going to look very similar. So for me, it comes down to cost. What's cheaper for me? That's really all I care about. And so we've decided to model out a scenario. We've said $100 a fortnight into Bitcoin. How does that compare using BetaShares Direct to buy the ETF?
Yeah.
So that will be no brokerage
and
the 45 basis points management fee.
Yeah.
And then I'm comparing that to using SwiftX, which charges 0.6% brokerage, so a percentage of what you invest, but then there's no ongoing management fee.
Yes.
So that's our apples to apples comparison.
Love it. And we both use SwiftX.
Yes.
Yes.
So let's start with BetaShares Direct. No brokerage, but you do pay the management fee on the ETF. Each fortnight, if you invest $100, over the course of a year, you'll invest $2,600, 26 fortnights in a year. And then I just took off the 45 basis points management fee at the end of the year.
Yep.
So you've invested $2,588.30.
Okay.
So the question is, how does that compare to using SwiftX, where you invest $100 a fortnight and they take the 0.6% off?
Yep.
So each fortnight, you're actually investing $99.40. By the end of the first year, you'll have $2,584.40.
So about a $4 difference.
About a $4 difference.
Yeah, that's good. Good little scenario there.
Yeah. Now we should say, if you're thinking really long term here, and you're thinking, decades long time horizon, the 45 basis points management fee will cost you more over the long time as your balance increases. But if you're thinking about just getting started, and investing for a couple of years and sort of building a position in Bitcoin, it's really a wash if you go ETF or direct.
Yeah. So, assuming I don't start investing $1,000 a fortnight as well.
Well, either way, it's like, because the balance is getting so big, the 45 basis points is a bigger, bigger raw number.
Yeah. I might be wanting to invest $100,000 a fortnight.
Oh, you're saying if you,
you know what I mean? Like,
yeah. I'm assuming that you stick at the $100.
Yes.
Yeah. No, that is a very fair point. All right, well, Bryce, let's wrap this up before we get too down the rabbit hole of our hypothetical. For Jordan or for any other beginner out there, how are you advising them? General advice only, do your own research, but how are you suggesting people get started?
I don't think there's a irritating response to it. There's no right or wrong way here. If you're comfortable to go direct and go through an exchange, then we've shown that at least for year one, there's not a huge difference. I feel though that if you have started to build a portfolio of ETFs and you're comfortable with that and you're comfortable using BetaShares Direct or whatever your platform is, and we've kind of illustrated that there is a very genuine option to get access to Bitcoin through your ETFs and have it all in your one portfolio and not have to worry about the other exchange. So I think if you wanted to do it that way and you're just starting off, then there's nothing wrong with that.
Yeah. So Jordan, there's no right or wrong answer here. It's whatever works for you. There's pros and cons to each. Annoying answer. Yeah, that's the annoying reality. Like, investing has never been easier, but it's so easy now. There are multiple routes to basically getting the same outcome. And that's really what matters. If you decide you want to invest in Bitcoin, you want exposure to Bitcoin at the lowest cost possible, and there are multiple ways to do that. So I think that's it.
Well, Jordan, thank you so much for the question. As we said, we love hearing from you guys. So please make sure you leave a question in our voicemail. You'll find a link in the show notes or the description below. But that brings us to the end. We've got all of our videos now on a separate Get Started Investing YouTube channel, so you don't have to get it confused with any of the other content that we do. There'll be a link in the show notes as well. Head over there. It's going off. Everything you hear on the show is now also filmed in video, so you can watch us if you're listening on YouTube. And we do love it if you can leave us a rating and a review on your podcast app, or like this video and leave some comments below. We love hearing from you. We love getting your feedback. We do really appreciate the support that you guys give us, as always. But Ren, that brings us to the end. We'll pick it up next week.
Sounds good.